Hi, my name is Michael Zhao from Grayscale Investments, and today I'm going to give you the rundown on the last month in crypto. Crypto valuations retreated in August 2024 alongside a brief spike in broader financial market volatility. Following a weaker than expected jobs report on August 2nd, prices for many risky assets declined and equity volatility surged, with the VIX index at one point reaching a significant high. However, subsequent economic data showed no further signs of imminent danger, and many market segments rebounded, with the VIX index quickly retreating back below 20%. Bitcoin outperformed while ETH underperformed during this period. At a speech at the annual Jackson Hole conference on August 23rd, Fed Chair Powell said that the time had come to reduce rates, partly reflecting the fact that downside risks to employment have increased. Interest rate futures now imply that the central bank will reduce policy rates significantly over the 3 remaining FOMC meetings this year. Taken together, the short burst of volatility and signals of likely rate cuts left a number of lasting changes on the markets. Market segments at the center of the storm, including short volatility strategies and FX carry trades, have declined significantly, and the US dollar weakened against major currencies as well as the price of gold. And defensive assets like high-quality bonds and consumer staple stocks outperformed. Ethereum declined meaningfully and was among the underperforming assets on a risk-adjusted basis. Dollar weakness and lower interest rates, if they continue, should be positive for Bitcoin's valuation. Like physical gold, Bitcoin is an alternative money system that competes with US dollar in international markets. Lower US interest rates erode the dollar's competitive advantage and can benefit assets that compete with the dollar, including other fiat currencies, physical gold, and Bitcoin. Over the last few years, as digital assets have become more integrated with mainstream financial markets, Bitcoin has had a negative correlation with both the level of real interest rates and the value of the dollar. Ethereum significantly underperformed in the early August drawdown and failed to rebound as significantly later in the month. In part, this reflected the long positioning in both CME-listed and perpetual futures. More fundamentally, the Ethereum network is going through a major transition, which may be creating uncertainty about its future among investors. Ethereum intends to achieve greater scale by moving more transactions to Layer 2 networks, which will then periodically settle on the Layer 1 mainnet. The strategy has been working. Activity in Layer 2s have actually boomed this year, and major companies like Sony have announced projects within this ecosystem. The FTSE Grayscale crypto sector's family of indices also declined during August, albeit by less than Ethereum. Despite the setback in the marketplace, overall there are a few notable bright spots, especially in the currencies crypto sector and the financials crypto sector. Stablecoin market cap also rose again in August and is now approaching its previous all-time high. Importantly, a software update from Apple may bring stablecoin payments to developed markets. Circle CEO Jeremy Allaire said that tap-to-pay payments using Circle's USDC stablecoin will soon be available on iPhones, thanks to Apple's decision to open up NFC payments to third-party developers. Separately, Latin American e-commerce platforms like Mercado Libre have announced the creation of their own USD-linked stablecoin, while stablecoin issuer Tether said they would create a token linked to the UAE's dirham. Lastly, towards the end of the month, there was increasing focus on potential connections between blockchain technology and digital privacy. Elsewhere, in the smart contracts platform crypto sector, the Near protocol launched Nightshade 2.0, which is intended to make the chain even faster, while the Stacks protocol introduced its long-awaited Nakamoto upgrade. Looking ahead, Bitcoin's price has held in a fairly tight range since the first quarter, as crypto markets have digested positive fundamental news on one hand, but sources of selling pressure on the other. Grayscale Research believes that the selling pressure from the various sources is mostly behind us, and that improving fundamentals should increasingly show through. If the US labor market holds up, Fed rate cuts and shifting US politics around the crypto industry could allow prices to retest their all-time highs later this year. However, the main downside risk to valuations is a further increase in unemployment rate and possible recession. Investors should carefully monitor the upcoming labor market data, including the next monthly employment report scheduled for September 6th. Even if recession risks emerge, Grayscale Research believes that there's a very little tolerance for a deep economic downturn, and that policymakers are likely to resort to monetary and fiscal stimulus at the first sign of trouble. This undisciplined approach to monetary and fiscal policy is one reason why some investors might choose to invest in Bitcoin. A period of economic weakness could therefore reinforce a long-term Bitcoin investment thesis. Thanks for listening, and I'll see you next month.